ABS wage price index has risen to an annual rate of 2.2% over the September quarter. For more on what that means, I'm joined by our business editor, Ross Greenwood. Ross, wages are now at a pre-pandemic level. How does that tie in to the inflation debate we're hearing so much about at the moment?
Yeah, it's so true, isn't it? It's only a day after the Reserve Bank has come out and indicated that the Reserve Bank governor saying that he believes really that this inflation is transitory, that he's taking on effectively the money markets. So today you see wages inflation out. Now, this is pretty important because, of course, if wages are rising fast with labour shortages, then that feeds into prices. And if prices start to rise and inflation starts to rise, and if it gets out of control, it becomes significant. So this is what we see on a quarterly basis. The wages, 0.6%, and on an annual basis, that's the key here, 2.2%. And it is a couple of years since the wages growth has been that big. But by the same token, this is exactly what economists had forecast. It's right on consensus. There was no real surprise here. We go further forward, what we can see here also is that the wages price index really returning, the ABS says today, to its pre-pandemic level. And you can really see there the fall that came as a result of a lot of people being put out of work. And as a result, the pressure came right off wages. Now it jumps very, very sharply. So the end of lockdowns equals people getting back to work, and therefore, as a result, most people starting to get wage rises. Most coincidentally actually negotiate it themselves. There are still some quite clearly who do it through awards. That's in the minority right now, and also through enterprise bargaining agreements. But most, it seems, from the Reserve Bank today is largely through doing it themselves, which is interesting.
So what industries saw the best rises? Were there clear winners?
Yeah, there are. So there's some good stats out of this. It's really interesting to note this. So if we take you through some of the other charts that we've put together for you, just to show exactly where the wage rises are and who's getting them right now, what you can start to see is that the Australian Bureau of Statistics is actually indicating that professionals, the construction industry, the administration industry, and also education, interestingly, here, because generally the public service is getting less than what the private enterprise is. So of all workers, private sector got 2.4% increases, the public sector 1.7%. But you can see here that professionals significantly got higher wage increases. Contrast also that the inflation rate, the underlying inflation rate is 2.1%. So all of these industries are getting wage rises that are higher than inflation. And that's pretty important. If we go to those who are getting the lowest rises right now through industry, electricity, gas and water, so utilities workers, people in mining, which is also unusual because there's been a mining boom on, particularly in Western Australia, in iron ore. Arts and recreation, that's understandable given the lockdowns and that industry being closed down. Finance and insurance is also industry. And all of these industries are well behind inflation. So this is also, if you like, some of the challenges to try and lift some of these areas. And certainly today, the head of statistics here at the Bureau of Statistics, this is Michelle Marquardt, basically said today that pockets of wage pressure continued to build for skilled construction-related technical and business services roles. So this also is a key because the shortage of workers adds to those wages pressures, adds to inflation. And that's the one thing that the Reserve Bank doesn't want and hopes that once borders are completely open, international borders that is, that what we're going to see is more workers arriving and pressure coming off these numbers.
Ross Greenwood, appreciate your analysis as always. Thank you.